Good morning, welcome to this update on Monday the 18th of July, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the market and the news. The news over the weekend, or the big news, would have been the coup in Turkey, but that appears to have been successfully put down and there haven't been any significant effects in the markets from that event. We might have expected there to be some significance for the euro, bearing in mind its involvement and geographical location next to Turkey. Okay, let's have a look for the news for the day ahead. Well, it's worth mentioning it's bank holiday in Japan, so anybody trading the yen or the Nikkei, be aware that the markets overnight would have been illiquid and therefore signals may not be as reliable as they normally are. We also overnight had the CPI numbers in for the Kiwi. They came in below forecast and we saw a significant fall in the price of the Kiwi immediately on that announcement. That number of reasons for that may have been a lack of liquidity in the market. Remember, we are in the summer trading time now. That was obviously a period of time when Europe and America weren't in the market, so the effect of that may have been exaggerated. Going forward today, we have Bank of England MPC member Wheel speaks at 9:15. I believe he's talking specifically about the measures or the potential measures following Brexit. So that's one to keep your eye on. And then overnight, we have the monetary policy meeting minutes on the Aussie. The major news event to keep your eye on this week will be the ECB press conference and minimum bid rate on Thursday lunchtime. Anticipation for that is we won't see anything significant coming out of that. What I've been reading is that economists, etc., expect Mario Draghi to do exactly the same as Mark Carney at the Bank of England and say he'll wait for data to see what the effects of the Brexit might be before initiating any action. Over in Asia, well, we had a quiet session on the Shanghai Composite. We're above this key level at 3045. We've broken out of this triangle, so we're interested to see if there's any more long side in this market at this moment in time. Over on the US dollar Chinese yuan exchange rate, again, we've had a slight pullback day there. We're in this zone here that I've got marked there, which are the previous high close here. Previous high close and the previous highs here. We've talked before of if we see the yuan being devalued, like in this move here, that could prove negative for equities. However, at this moment in time, we've got a risk on scenario. We're seeing bullish moves on worldwide equities and a movement away from safe havens. In the context of that, we'll see the Japanese yen weakening, and alongside that we'll see a strengthening of the Nikkei 225 equities index for Japan. We can see we had a very bullish week last week. We're at this key level, this intersection of the channel and level here, and we'll be looking for further yen weakness to break this level, look for a pullback and trade that long through the week. Here is the yen. This is the weekly on the yen. I've already mentioned that it's a bank holiday in Japan, so we haven't got anything to really glean from what's already happened this morning, hence the weekly chart. But as with the Nikkei, we've got a channel here, and we'll be looking for a breakout of that channel, a pullback to this 106.50 type level, again to take this trade long with an ongoing weakness on the yen. We've got targets of around 120 for the medium term on that, and we see potential for even higher numbers or higher targets on a longer term basis. Over on the US dollar, well, the dollar's been somewhat confined since the Brexit vote. We're not getting a lot out of it. We're looking for dollar strength. On Friday we had probably what was certainly the most bullish day of the week. We've had a sell-off on the open stroke overnight. Key level here, we've got a 97. We're coming up to $97 and the top of this channel. If we get a break above that, then we'll be firmly into dollar strength. We may, however, have to see price come back down before we get the dollar strength returning to the market. Over on the euro, well, we had a very quiet week last week. Markets are lacking liquidity now. We're right in the meat of the summer holiday period, when we always see a reduction in participants, hence liquidity in the markets. So we do need to be more cautious with our entries, less aggressive, and potentially reducing risk. We can see here, we can find within this triangle formation, I'll be looking for a test of this level stroke the top of the triangle. Our bias is short on the euro. We've got the ECB announcement, which we're aware of on Thursday, but we only see downside in this market. But we possibly don't see any big moves this week, simply because, as I've said, I don't think we'll get anything new out of the ECB. Over on the pound last week, well, we saw some proper strength through the week until Friday, when Friday sold off most of Thursday's gains. The level that we're interested in here is if we get any more pound strength, is this at 1.35. This is the low of the 2008 crisis, so we'll be looking for, apart from being a technical level, it's a significant psychological level, so we'll be looking for a break above, retest to take that market long if that was to occur. Over in New Zealand, we tried to get short this market last week. We were just stopped out. Our bias is short this market at least to the bottom of the channel. You can see I've got another entry with another attempt to get into this market to take it down to that level. Similarly, we've got a similar market in the Aussie. We're looking to trade. We're in this trade, and we're looking to trade this down to the trend line intersection with the level there, and we will potentially be looking for intraday entries into this market. It should offer us some opportunities through the week down to this level. We've already mentioned risk off. Well, last week we got a final confirmation that our short trade on gold, or our short-term bias to the downside on gold, the weekly bar is a big engulfing bar here. We're now looking for a break below the 1300 level to indicate that we may reach levels of around 1250, being the intersection with the trend line here. Our longer term bias is definitively long this market. Our bias for the year is a risk off. Just at this moment in time, we've been waiting for a pullback. We've had a commitment of traders signal here that suggests the market's reached the top. And now we've had the risk on scenario arriving with bullish equities following the recovery through Brexit. And we're now looking on the downside here before taking, say, 1250 potentially if we get this break below 1300. Okay, guys, that's it for today. So an interesting week ahead. Not too much news. Again, be aware of the summer period lack of liquidity. If you're interested in the way that we trade, we do have an event on tomorrow afternoon in London. If you're very quick and you email us this morning at info@phoenixblue.co.uk or visit the website, there are still one or two opportunities, one or two places to come on our session, 4 hours free trading with one of the Phoenix Blue fund managers, opportunity to ask as many questions as you like, and talk to some of the Phoenix Blue clients who've benefited from the systems that we use. Okay, beginning of another week. May I just wish you all happy trading, and we'll speak to you again tomorrow. Thanks a lot. Bye now.